What's up everyone, it is Sam here from Market Movers, and today I'm going to be talking about a topic that is going on in the moment in the markets. And obviously you're seeing all of these increases in oil and gas. All energy kind of suppliers are all going through the roof. So I'm just going to look today at where is possibly going to be the best for you to play the energy surge that's going on right now. The companies to look at, what their valuations are. Is it going to be a temporary trade, or is this going to continue to go on for the majority of the year? I'll see if we're actually getting invested ourselves in some of the energy kind of plays, which is of interest at the moment, like just because it does seem like the place where you do make money is in energy stocks. So look guys, without further ado, do hit the like button, hit the subscribe button. It does help us out an awful lot on this channel. And do hit our sponsors down below of Cafe Pompeii and 35mm Vintage as well. So do check them out too. So let's get straight into the video. So guys, here we have it. So we have one of the biggest dogs, the biggest oil company in the world, and that is ExxonMobil. So ExxonMobil was definitely a beaten down stock over COVID, and the lack of oil demand, it definitely had an impact on it, but it's come back absolutely roaring this year. So ExxonMobil has gone on an unbelievable turn this year, all the way from a year ago, 61 to 87 at the moment. I know we're kind of having a bit of a down day coming at the moment. This is recording on a Wednesday lunchtime, but basically this stock has been on an absolute roll where the market has been getting absolutely decimated, and the stocks that you have that are possibly in the tech space, any consumables, it's all been getting devastated and following along with the Nasdaq, and also down with the Dow and the S&P 500. But these oil and energy stocks have been completely different. So they've been basically growing rapidly as the barrel of oil has gone crazy. So the barrel of oil basically was like 96 or something about a week ago, and went all the way up to over $137 a barrel, and now we're having a significant down day today. Basically, it's probably just a pullback, but I do see that these energy costs will continue to increase as the situation in the East is always evaporating and changing. But yeah, like wherever we're looking here, ExxonMobil, biggest oil company by market cap other than Saudi Aramco, and their PEs are pretty okay. So you got 60. Trading PE of 14, forward PE of around 12. Look like they're pretty cheap, but the analysts don't have their growth as very good for the year after. So they're good for this year, but not for the year after. So yeah, look, it could be a temporary trade. I don't know whether they've been updated since this massive surge in oil prices, but in my opinion, I wouldn't be going for ExxonMobil. So then we also have the giant coming out of the UK, which is BP, one of the biggest ones as well. So we'll kind of look at their statistics. So their statistics and forward PE is actually better than ExxonMobil's. So from a valuation perspective, you could nearly look to be playing BP. I know they've had a massive deal that they've exited from Russia at the moment at a cost of nearly $25 billion to them, but they could be an option if you are looking at this. Their forward PE ratio is extremely cheap. So yeah, look, they could be another play. And over the last year, they haven't really moved as much as Exxon as well. They haven't gotten as much attention, so they definitely could be one that you could look at to add to your portfolio to play this energy surge. So then, if you are going to be looking at analysis, so look, we have them growing 21%, similar to Exxon, but they're actually tipped to grow again next year, where ExxonMobil is not. So that's probably where it's kind of playing into where the PE is so cheap. So out of the two so far, I would be going with BP if I was going to invest in an energy company out of them two. Next, we do have the other American giant, which is Chevron. So Chevron always playing second fiddle at the moment to ExxonMobil. They do come with a bit of a higher ratio at the moment. So yeah, look, we'll have a look here. So they're trading PE of 17 and forward PE of 14 is slightly more expensive than ExxonMobil, But as you're kind of going into this, yeah, 17% less growth than Exxon and higher decline than Exxon as well for next year. But I'd be dubious to think that these have been updated since the last kind of surge over the last week or two in oil prices. But yeah, look, these are definitely plays that you can look at in the oil area. Then you also have the massive giant of Royal Dutch Shell. So Shell is listed on the London Stock Exchange, so slightly different to the other ones, even though BP is also listed on the NASDAQ or London Stock Exchange, sorry. And you're looking at statistics here. Look, they're very, very cheap. It's very, very cheap. It's nearly as cheap as a BP. BP slightly beating it on forward PE, but it is cheaper on current PE, and analysis is not available here. But I'm presuming it's probably going to be around the same, probably a nice increase this year, followed by a bit of a decline next year. But I don't think they've been updated. So these companies are absolutely minting it at the moment. There's something I heard about a barrel of oil in the US. To be profitable, you need to be selling at around 70. So you're making crazy money from that. And in Saudi Arabia, where they can make a barrel of oil for only about $10, they are 10xing their money on every barrel that is shipped out of there. So look, it is pretty crazy stuff. So just as another outsider, I do have this smaller cap stock that I have looked at in the past, and I did previously own, but I just kind of traded it and kind of got out of it quickly. But it is a Range Resources. So they are an energy company, and they've been on an absolute roll with the rest of them as well. And over the last year, they have gone from $10 a share to $26 a share, so giving around 160% increase. So yeah, their statistics, we'll have a look there. Their forward PE is very, very cheap. Their trading PE is in and around the same as the rest of the guys, but it's absolutely crazy growth really. From the stock price compared to the others. Their current year growing at 3%. I think this is going to be updated, obviously, as the new prices that come in, and also next year declining like the rest of them. So this is a kind of a smaller cap one. It'd be definitely one to look at if you want to play it that way, with a more high risk than the other ones. But out of all of these, I probably would be looking at a BP and Royal Dutch Shell as kind of more solid growth to play the energy sector, and also then maybe at Range Resources as basically another one that could be used as well as more of a high risk play. But it's like a temporary trade. You don't see this possibly lasting forever. Oil prices will inevitably probably come down eventually, and look, it's just a trade that everyone is going for at the moment. People love making easy money, and they're all flooding to the energy stocks at the moment. So yeah, look guys, it is definitely one to play. You can either look at something possibly like in Enphase. Yeah, we'll get it up there. Enphase Energy. So maybe even like something like Enphase, like if you're looking for a high growth solar, renewable energies, because obviously people will be looking for more renewables, like, oh, we need to change, we need to get away from Russian gas and oil. Looking at some of these companies as well could possibly be a way to play this. But look, they do come with amazingly big valuations, like 170 PE, forward PE of 50, but they come with great growth rates of 43% and 30% next year. Don't worry, these are going to be increased, especially with the current situation. So they're the guys. That's how I would play this market. I wouldn't invest directly in buying shares in like WTI, Wisdom Tree Oil, or any of them things that we can get on Trading 212. I would specifically be going to look at the stocks, and also they do come with dividends. So dividends of Exxon 4%. You have got a dividend here as well on BP of 4.5%, and Chevron, they are paying 3.51%. Shell are paying 3.2%. So you do get that as well as an added incentive to stay in these stocks for the long term. Personally myself, I don't see these plays as long-term plays. I just see them as the current kind of way that people are going, as energy prices do increase with the current situation that's going on in the world, and hopefully they kind of come to a resolution and make it more affordable, and we kind of get things back on track and avoid as much conflict as we can in that theatre. But guys, look, I hope you enjoyed this. I hope you kind of got a bit of insight of how possibly to play the energy run that's going on at the moment, and let us know if you are picking up any of these stocks. And do hit the like button, hit the subscribe button, helps us out an awful lot, and check out the sponsors down below as well. So thanks guys, bye bye.